So, first things first, is really big earnings week. There's also going to be a Fed meeting on Wednesday. So I think the biggest news of the week, though, is going to be earnings. And there's a ton of big ones, the Apples, Microsofts, you name it, they're announcing this week. I believe, let me just bring it up, but there is a big week of earnings. I don't think there's anything, not sure if there's anything tonight or not. All right, and then I will bring that up real quick. Take a look. All right, let's try that again. There you go. Okay, earnings. Let's see what we got. Nothing really. Cliffs Natural. We'll take a look at that one. Take a look at Cliffs. We had Coca-Cola Phillips. Coca-Cola's up pre-market a bit. Let's see here. We got, so for tonight and tomorrow morning, Cliffs, Whirlpool. We'll take a look at those two. The other ones, not so much. And tomorrow morning, Verizon, so Cliff, so CLF, WHL, and that would be for tonight. And then tomorrow morning, we got Verizon, UPS, General Motors, Mickey D's, $3M, Spotify, so some decent ones maybe tonight. Is that Raytheon? Raytheon's usually not a very good earnings play, though. But we'll look at them anyway. And then tomorrow night, Tuesday night's going to be a big night. Microsoft, Alphabet, Visa, to name the big hitters. And then we get into the rest of the week where Amazon, Caterpillar, and some big ones. The rest of the week, we got Meta, Boeing, and surprisingly, Apple doesn't support. They don't report this week, I guess. No, I guess not. I guess they're going to report next week. That's odd. I mean, usually they're in the same cycle as, unless I'm missing it, I don't see it on here. It's got to be next week then. It's got to be Monday or Tuesday, which is really odd because usually they report the same week as most of these other companies, unless I'm not seeing it. Am I blind? No, I don't see it. So there you have it. Let's dive right in and let's go to, all right, so then let's look at some futures. So that's earnings. So let's spit out of this. Let's spit out of that screen now that we know what the earnings are. So big week with earnings. And so let's look at the Russell. I have the Russell up here again today. I'm going to point this out. I'm going to move this up. I'm going to go over this because I had a couple of questions come in. And so here's the setups, right? So what you need to do is you just need to have the pivot points on your chart. Now, whichever ones you choose to do, it's entirely up to you. Again, it's not so much as what you do on those. Obviously, it's a fade trade, so when it crosses one of those pivots, right, you're looking to take that counter trade. You're not looking to pile on and follow the trend, right? It's a counter trade. And then looking at the chart today, it's a pretty easy one. to possibly see where you might have a couple of areas of R1. Looks very interesting, right? Couple of touches back on Thursday. And another touch on Friday, couldn't break out of R1. So R1 is going to be interesting today. So we're going to mark that. So on the RTY, it's going to be R1, which is going to be roughly 1807. This says 1807.40. Doesn't matter, 1807. Fact is, just you want to get alerted when it goes through there. And so there you have R1. Now, R2 is a little better setup because we have a kind of a double stacked candle here back on Wednesday that we could not break out of. And so I'm going to mark that as well. So that's also, and that's probably a better setup, quite honestly. And so that's going to be 1813.60. And then obviously R3, and again, this all relates back to, you could just go back to the chart here, and I'm using a 1 hour chart. That's all usually I use. I don't really get into, is a tick chart. Usually when I do these pivots, it's always an hour chart. It just is what it is. Simplify it. Don't overcomplicate it. And again, these are just points of reference. And all three of these today kind of line up pretty scarily to some previous swings that we were not able to break out of, making them all pretty high probability trades today. If in fact we get up to any of these areas, you can see it's a fairly tight range too. We're really not in a very wide range. We're in a pretty tight range, but all of these are pretty viable. Now on the support side, little different story. I wouldn't really touch S1, right? This already rejected. This was a S1 on Friday, and it actually worked out perfect, right? If anybody was paying attention, this was S1 down here, literally came down, tagged S1, and rallied back. I wish I would have been able to take it and say I could. If I was selling some bullshit or some service, I probably would be out here banging the table. See, I told you, but I didn't. I happened to be away from my computer, and I wasn't able to take the trade. But if you did and you've seen it, there you go. You actually had a really nice winner yesterday as far as a quick scalp trade. So S2 today is actually another key area I think that's going to be interesting as well. And that's 18, and it's S2 at 1781.50. And again, it's arbitrary. If you like round numbers, just put the round number in there. It's really a matter of getting alerted and being aware that it's cracked through there. And if we just go back to last Friday, we actually had an area there where it did touch and rallied back quite a bit. Actually, that was a pretty big move. Now, as far as S3, I don't believe there's really much of a setup there. There's really nothing short term that would tell me that there's any kind of interest there or showing that. So that's kind of off the table. And quite honestly, I think if we breach an S3 today, that's going to probably translate into a pretty nasty market overall. And I'm not sure you're really going to want to, catch a fallen knife, so to speak. And then if you look here, S2 lines up perfectly with this high volume node down here. And again, I just drilled in and it just happened. So that's actually a good sign. And then both of these support levels, both S2 and S1, both line up with a high volume node. Amazing. I didn't even look at that, but that actually is another reinforcing point here of why these would be significant. So if I was actually to point out what the highest probability trades are today, it's going to be it's going to be this R2 in my opinion. So I'm going to be really looking at that one pretty strongly. today. I may actually look if we're kind of grinding lower and it's a slow grind down to S1 or back to S1, you might have a little setup here. You have a bit of a low volume node. Maybe it runs out of steam. You really got to be aware of that. I don't know if it's worthy of putting an alert in, so I'm not going to really do that. But if I happen to be sitting in front of my computer and we're kind of drifting down and drifting down slow, that to me would be a good setup on S1. Otherwise, chances are if it has any kind of momentum to the downside, it's going to blow through that like it's not even there, like it doesn't even exist. So again, the high probability trades today are going to be R2 and S2, in my opinion. And that's why I'm going to circle those. And that's on the Russell. And so that's really it. And I don't really see anything. Honestly, I don't really see anything on the S&Ps. And I think the reason is the S&Ps, again, today, if you look overnight, we actually bounced beautifully off S2. S&Ps and the NASDAQ, I think we have a problem with weighting. And weighting means I think those two indexes are just too highly weighted on too few stocks. And that's kind of keeping me from trading them because there's so much impact on a few stocks. The few stocks have such a large impact on these indexes. It's just very hard to trade. And if you're going to trade these indexes, you might as well just trade those bigger stocks. Anyway, that's just kind of my take on the broader indexes. And so that's that on the index. So again, a Russell to me is going to be the one to trade. It's always the one to trade, in my opinion. I think it's more of a trader's index anyway than the other two. Looking at soybeans, kind of surprised of the fairly big swath down that we've had. We did bounce nice off S1 over the weekend from Thursday into Friday. I don't know if that continues. I know there's a report that comes out tomorrow morning. On export sales. So you probably just take a look at that. They usually release those on Tuesday morning. Export sales for the week. Sometimes they come out Monday afternoon. And so that is that on the indexes. And then again, we're going to be watching the dollar and the bonds. Bonds are actually up again today, so they're showing pretty good strength. All right, let's dive into Cliffs Naturel. Cliffs. And then somebody was saying to me, like, how you doing this year? All right, so here's how I'm doing. This is my main trading account for the most part. This is where I do most of my trading. I'm up $3,700. That's it. Now I'm up I have other accounts as well. This is the one I kind of measure myself on because it's the one I'm most active. This is both an IRA and a regular account. So just so you know, I trade both. I like to do stuff in my IRA more than my regular account for obvious reasons. I don't want to pay taxes. That's it. I think trading in an IRA is probably the smartest thing you could possibly do. So if you get a chance and you get the opportunity to open an IRA with a company that allow you to do everything in there, stocks, options, futures, you name it, do it because that's the way to fly. Because if you're trading in a regular account, you're doing yourself a grave injustice. I don't care what anybody says. You all talk about these people who are trading and trading for a living. If you're trading for a living, that means you're basically a 1099. That means you're both an employer and an employee. So you're paying roughly 30 to 35, sometimes 40% of your gains you're paying in taxes. So that's what it is. Those are the rules. I don't make them up. And so anybody who's telling you, they're making back, good for them, but bad for them because they're an idiot if they're trading in a regular account. So anyway, I do it. I'm not saying I don't do it, but I try not to do it as often. So anyway, there it is. That's my track record. Not great. I wish it was better, but it is what it is. I'm up at least. Last year, I took a beating over here. I think I was down 15 or 16 grand last year, which is the first time in a few years that I've actually was down. on the year. But who wasn't down on the year? Probably 5 people who are probably trying to sell you some service. So anyway, there you go. There's my returns. Who cares, right? Doesn't matter. And so let's look at the Cliffs Natural. First of all, let's going to see if there's any volatility in here. And there's not. There's like literally no volatility in here at all. IV rank of 21 is it's terrible. But let's look at the markets. I'm probably not going to do anything in May if I do anything. And really in here, because it's such a low price stock, I don't know what you can really do. You can't really do anything besides, sell a put. You sell the 14 put. Expected move is about $2. You maybe get a little directional. I don't really see much of anything else. The markets are pretty good in here. They're fairly tight. So you shouldn't have a problem with that. That's kind of all I can see. And then I think if you want to be more of an investor, if you're more of an investor as opposed to a trader, perhaps you just do the covered call. Buy 100 shares and sell the 16 calls. Sell the 16 calls. Yeah, I mean, that would be the other alternative. And so that's really all you have. And then if you don't want to get as aggressive, maybe you sell the 17 call instead. Still put your cost basis at $15. A little outside the expected move. But nonetheless, I like the 16. If you're going to sell the covered call, I like the 16 because you're getting a little bit more premium. You're kind of locking in about $140 worth of profit if it does blow out 16. So, okay, great. And then if it goes down, you're at least getting paid for it as well. So when you do, if it does blow up, and let's say it tanks and it goes down to 14, you still can roll the 16 down to the 14 and then really make bank on it. And that to me would be, the play would be the covered call, buy 100 shares. And here you can see I'm actually in an IRA. That's why if you do this in a margin account, your margin for this isn't going to be that bad. You can see if I'm doing this in a margin account, it's only going to be $600 to do 100 shares. So to me, this is kind of the trade that I would do in Cliffs. I kind of like that. I have some stock in Cliffs. I may just sell the 16. I already own Cliffs Natural. I have a few hundred shares. So I may just sell the 16s. And maybe sell a 16-14 for me. If you already own stock, sell a 16-14 strangle against stock. Now, only if you have stock. If you don't, just sell the put. Either one. So sell the 14 put or the covered call. So for Cliffs, CLF. Right, we're going to, and this is all in June. I wouldn't do May. Give yourself a little time. June is just sell the 14 put or do a June CC, covered call, which you would buy 100 shares, buy 100, and then sell the 16 call against it, right? And then the beauty of that trade is if we sell the 16 and buy and then we sell the 16 against it, what that's going to do is that gives your cost basis of $14.60 on Cliffs. Now, if you're bearish, right? If you feel a little bearish, and you want to play the bearish side of this, just move this down to a 14 or 15, right? Depending if you're really bearish, go to 14, but 15 would be the play, right? So if you want to skew it bearish, sell the 15 instead of the 16. So that would really be the only alternate I would do, but I still like the 16 better. So there you go. There you have it. I mean, again, if you do this one on a margin account, it's going to run you about, what, 670 in buying power? Buying power is only 670. And you could still do this in an IRA. You're just going to use the cash. That's the only problem, right? So if you do it in your IRA, you could do it as cash, but still, it's still going to be the same output. You're just going to wind up using more money. It's going to cost you $1,400 to do this trade. So there's CLF. What else? Who else do we have? CLF. Whirlpool. Whirlpool generally isn't a very good one. Whirlpool. So Whirlpool. What is Whirlpool? I always forget the damn symbol for Whirlpool. I always forget the symbol. I thought it was WHR. Is it WHR or WHL? Yeah, WHR. I always forget the symbol for this. I don't know why. IB rank of 20. That's awful too. But let's take a look at June. Generally speaking, let's see, expected move. So Whirlpool, expected move is $11.08. IB rank at 20 sucks, but we'll take a look anyway. There's not going to be much that has a very good IB rank. Honestly, this volatility is just sucks right now. So let's see, let's just do the one standard deviation strangle, and then full disclosure, the margins usually suck in this stock. And as you can see, markets are pretty wide in here, right? 115 bid, 150 ask. That blows. That blows right out of the gate. So again, it's just the nature of the stock overall. It doesn't really get a very high liquidity ranking. And you can see there is a bit of put skew here. There is definitely a bit of put skew. And how do I know that? Is that I'm actually at a 12 delta put. And a 12 delta call is 65 cents, right? And if there was no skew, this should be the same. So there's an enormous amount of put skew in here. And so if I was to do about the one standard deviation strangle, it brings me to a 155, 115 strangle. Turn these fucking dopes off. Financial news, nothing but trash. Problem with this trade, though, is I really don't want to use $1,400. That's it in a nutshell. I don't want to use $1,400 of buying power to do this trade, and to me, that's just an outright rip-off. I don't even think you're really going to be able to do an iron condor. Let's turn it into an iron condor real quick. For $108, let's call it $110. I don't know if it's really worth the risk for $400. You're in a pretty tight range, 11. I'm outside the expected move, but I'm right on the one standard deviation on the call side, and I'm below one standard deviation on the put side. I don't know. I just don't think there's enough juice in this. This one's, I think, is going to be a hard pass. So we're going to do a hard pass on a Whirlpool. No Whirlpool. So no Whirlpool. All right, what else? Verizon. Let's see, Verizon. IB rank is actually not bad at 31, considering. Let's go to June. Expected move. This thing never really moves for earnings. If anything, it usually gets crushed. There's no juice in here to do much of anything. I just can't see it. And then usually the margins suck in this. Actually, the margins are not entirely horrible, but the premiums in here are just god-awful. There is nothing to do in here. There really is nothing to do. I mean, to me, I think if I was going to have to do it, somebody put a gun to my head. I shouldn't even say that anymore. So that might offend somebody, but if somebody did and somebody said, hey, what would you do? I'd probably do something like this. I'd probably do like a 30, probably the 36. I'd probably do like the 36-35 put ratio. But I'm not sure it's even worth even for the, all right, look, max profit's 123. I'm not getting $123 out of this. I mean, for me to get $123 out of this would have to go between these two strikes right here, the 36 and 35, at expiry. If we look at the analysis tab, right, you would literally have to, this thing would, right, the wheelhouse for this would be land at 35 near expiration, and that's slim to none. High profitability, but again, I don't know if I want to risk $500. There's nothing to do here. Pass. On Verizon. No Verizon. UPS. There's another one that's tough. UPS is tough. 21 IV rank. Kind of sucks. Markets are usually not very tight in here, and it's not very liquid. And I will tell you, margins are usually awful. Yeah, I mean, margins are pretty suck in here. So let's see, just barely the one standard deviation strangle, which gives us like a 170-210. I'm inside and just on the outside of the bubble of the expected move. The expected move is $12. I don't see it happening. I think this one's going to be a hard pass too. I mean, $2,400 to bring in 300. Even if I did an iron condor. Problem is I can't do a real iron condor here because like once I get up over 200, the strikes are $10 wide. So I have to do a wider iron condor, which again is fine altogether. That's not a horrible trade. This is not bad. If I could squeak 205 out of this, I would do this. All right, so actually, it's quite surprising. So here's UPS. And then we can get rid of this because we're not going to do that. It was a hard pass. So I think UPS may not be that bad. So UPS expected move was 11. What was 11? I'll be right. What was 11? Expected move was $12.67. So it's about $12. What the hell? All right, $12. We'll just call it $12.50 just to be. IB rank sucks, but at 20 in this market right now with volatility the way it is, not bad. And yeah, I kind of like the wider iron condor. So it's so it's an iron condor, the IC. So it's going to be a put spread. So you're going to be at a 1. This is all in June, just so you know. So June, all in June. So it's an iron condor, all in June. It's going to be the 160, 170, right? Put call. So you're going to sell the 170 and buy the 160 put. All right, that's leg one. You're going to do it all as one leg, just to explain. And then here, you're going to do the 210, 220. And these are going to be a sell and a buy. And this is going to be a call and a call. All right. All right. So it's basically two calls. You're going to do it as one trade, though, right? You're going to do it as an iron condor. Four-legged creature. $10 wide, little different. Good probability of profit here, 70%. I mean, so if you're looking for a trade, I kind of like it, right? It's thin pickings out there. It's actually a delta negative trade, right? So it is actually skewed delta negative. That's a negative delta of 750. Theta isn't bad either. I mean, a theta of 3 on an iron condor isn't that bad. You usually don't get a lot of theta. Now, we're probably getting a little bit better theta than we normally would because we're out, 53 days? We're in June. We're not in May. But that's the way it is. So anyway, and for 205. And you have flexibility here, right? If your calls get blown out, you can roll up your puts. If your puts get blown out, you roll down your calls. So there you have it. So there's one for UPS. Not bad. So that's tomorrow morning. These are for tomorrow morning. So you'd have to put these on after 3 o'clock. 3:30, start putting those on. General Motors, that's probably not going to be. General Motors, I never usually do. I'm going to just put it up. 34 IV ranks, not bad. But usually there's not a hell of a lot you can do in General Motors. $3 expected move. Let me move my big fat head. My big fat head, because I realize it's cutting off the bottom of this. There you go. But yeah, no. There's not much you could do. I mean, again, what are you going to do in here? Maybe you do, maybe you sell a put. It's 33. I mean, you could sell the 30 puts. Markets are somewhat tight in here. Margins are good. I mean, if you do sell a call, you're going to need to sell something relatively close. I mean, it's a $3 move. Maybe you sell the 37. I mean, this isn't a bad trade. This General Motors 30. It's the 30-37. So you're basically selling the at the expected move strangle. I mean, you could widen it a little bit, go right on the outside. I don't know if you're going to bring in enough money. To me, to do that for $100 just doesn't seem to be worth it. You're going to need to skew it one way or the other. And that's delta. That's a little delta negative, but for the most part, it's about delta neutral. To me, you're going to need to skew this one either heavy delta neutral or heavy delta negative or heavy delta positive to bring in any kind of juice. And what I mean by juice is bring in any kind of premium, making it worth selling here. And that's kind of why I like the 3730. And it's both of these are right around, again, not perfect, but right around the 20 delta. I mean, the 38 is at perfectly the 20 delta. The 29 is at 18. You can't really get much closer than that. Again, I just don't know if $100 is enough. To me, I would do this for 150 and take a little bit more risk that this falls within the expected move. So that would be my trade on General Motors. I don't think that that's that bad. Again, if you're looking for a trade, margins are good. General Motors, expected move was about $3. IV rank was 34.8. And then we're going to be doing a strangle. And then I have to just tell you, look, strangle is an uncovered strategy that you can possibly lose all your money. Blah, 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 blah. So anyway, there you have it. So that's what strangle is. So strangle is an uncovered iron condor, right? Your max loss is infinity because General Motors can go up. You know, everybody knows stocks just go up. So, you know, the price of this can go up, which I don't. Anyway, whatever. Don't get me started. Why would they say that your max loss is infinity? Nothing goes up forever. We finally understand that now. So anyway, this is what you would do. 150. So it's the strangle in June. We're all in June here. Reason is because there's just not enough time. I don't like to be under that third. Because if I have to roll this, right, I don't want to roll into a cycle where that's almost done. That's why I'm out in June. And so you're going to do the 30. You're going to sell a 30 put. And you're going to sell the 37 call, making that a strangle. Cat. It's not cat. It's a call, you dumbass. All right. I would do it. I would squeeze it and do it for 150 credit. Don't take less than that. I think 150 is perfect. Buying power is pretty reasonable. It's only 340, 336, call it 340. Good stats on this, 65% pop. It's basically delta neutral. It's a little skewed delta negative. Decent theta, almost 3. Again, it would be much better if it was in May, but that's what I would do for General Motors if I had to do something there. So there's General Motors. All right, what are we going to do next? McDonald's. Problem is McDonald's usually is a IV rank of 5.5. I ain't touching it. I ain't gonna look at it. Forget about it. Move on. 3M looks good. 3M looks good. Problem with this stock though is it inherently has problems with margin. Margin usually blows in here. Spreads in here are not horrible. They're not great. About 8 cents wide here, about 15 cents wide here. I would stick to the 95s. Kind of like the 95. Pretty tight move though. Only expecting expected move of $7. 3M. So expected move is 7. We'll call it 7.40. $7.40 in June. IV rank is okay, which is 43. That's much higher than most. But again, margins in here are going to suck. And a very tight move, and I'm not really getting paid much. Not getting paid much to take on a decent amount of risk. $1,100 to bring in 252, 65% pop. It just there's not enough here. There's just not enough here at all to justify. In my opinion, it's just there's not. You can't even do. You're literally doing the expected move strangle, and you're only bringing in $2, and you're using $1,100 in buying power. Is just horrible. Horrible. So I don't think you can really do that. Maybe. And then depending on what your outlook is on things, yeah, you can't even do a ratio. I don't really see you doing anything in the call spread area. Maybe you do a calendar spread. Let's take a look at 3M real quick on the chart. Let's just take a quick look at 3M. I would assume it's trending down just like everything else. It's not 4M, it's 3M, you dumbass. It's a 3M. Yeah, I mean, the chart even looks pretty bad here. Yeah, I just got this, whatever I had. I don't know what I was looking at. I got all this crisscross, but it's not the good. If anything, there's some support at $99, but who the hell knows? And if we zoom all the way out, yeah, we got to go to a 5-year chart to get anything even like to look where, and I still don't even think you get to the bottom. Yeah, I mean, this is at like historic kind of low levels here. I mean, you got to go back to, you got to go back to 2013 to find any kind of support, and it looks like it's about $91, $92. So I don't even know if I would, again, I'm just trying to find something. I don't know if I'd want to do anything in here. It's sad, but I got to do a hard pass. You're just not getting paid enough to do anything in there. So that's a suck job on 3M. It's a shame. And then Spotify. This one's usually pretty good for earnings. 29 IV rank. Not great. Expected move is $16. That's pretty. So it's trading at what, 133 these days? Good old Spotify. Let's get rid of that. Get rid of that. Okay. Spotify. Spot. I think the biggest disappointment for me is for Spotify is that IV rank kind of sucks. 1675. Expected move. Ivy rank is kind of low at 29. I'd like to see that in the 40s or 50s. That would actually be nice. Let's see, the June, let's do the 1 standard deviation strangle. And this one's kind of in my wheelhouse, folks. This one, I think, perhaps may be the trade of the week. Yeah. This may be the trade of the week, or at least the trade of the day. Yeah, I'm going to go with that one. I kind of like it. So it's the Spotify. It's going to be a strangle. And what's going to be nice about this strangle is you can actually turn this into an iron condor if you don't have the capital. You're going to use $1,300 worth of capital on this one. But the stats are sweet on this, meaning that, look, I'm getting a good probability of profit, 78%. Basically delta neutral. It's a little skewed delta negative at 550. You're getting a theta almost 10 on this, and that's pretty good considering we're out 52 days, 53 days, or whatever it is. And we're going to bring in $3.30 of a premium. So it's a strangle. So that means, and it's all in June. And you're going to do the 105, 160. So it's the 105. You're going to sell. And both are sells because it's a strangle. Put. And this one's the call. Okay. Do it for, I would actually even, because this is pre-market, I would actually do this and literally go out on a whim here. Looks like it's gapping up a little bit today too. It's up about $2. So you might want to just hold, you're going to need to do this one around 330 today. So you may even be able to get this one a little bit more juiced at 335, maybe even 340, but definitely add some juice to it, right? Good pop in here at 78%. Good theta number, and there's your trade, right? So it is a strangle. So again, be aware, strangles are an uncovered position, blah, blah, blah. You could possibly lose everything in your account. Spotify can go up to $1,000, and then you lose everything you own. All right, so anyway, there you have it with Spotify. And then the nice thing about this is we could turn this into, an iron condor pretty quickly, and we're going to get a decent premium for it. Right, so we'd come out here and then buy the 165. We're going to turn this into iron condor and then buy the 100. You can probably do this one. I'm going to say you're going to probably do this one by the time market opens, probably about 105. And I think either one of those trades is a good trade because you're still a probability of profit of 47%. Again, it's not perfect. I would wish the IV rank was a lot higher. You're getting a lot more money for this, but it is what it is. You got to work with what we have. And we are outside the 1 standard deviation move. So we're in a pretty high probability situation. So either one, doesn't matter. This is what it looks like on the curve, right? So if you do the strangle, you're going to just do the inside leg, 105, 160, sell it. It's about $1,300. If you don't have the capital, you do the iron condor, you cover the wings, you buy 100, you buy 165, and you cover those wings, turn it into an iron condor, and there you have it. So that's what's nice about Spotify. And that is a wrap, I think. And so pretty good session, I think. We went over some setups in the Russell, and then we did quite a few trades for earnings both tonight. Again, with these earnings trades, just make sure that when you're putting them on, that you start doing them around, I always say start looking to do something between 3 and 3:30. Don't wait till 3:30 because market's going to be moving. And a lot of times, sometimes 30 minutes is not enough time to get, if you want to do them all, or as many, however many you want to do, you're just not enough time to get filled because these trades take a little time to get filled. You're not just going to throw them out in the market and then they just miraculously get filled like every jackass out on La La Land shows, right? You may have to sit in this for 15 minutes at mid-price, right? If you want to get the best execution, you want to get the best price, you got to play a little bit with the game. You know, a couple pennies here, a couple pennies there. People say, oh, well, you know, why do you fight? Because you know what? That's the game. You know, why should I give them the pennies when I deserve them, right? I'm not going to give up that opportunity costs. I want that money. I'm not going to just forfeit and put it into the market and just say, oh, yeah, okay, whatever. No, thanks. But anyway, just take some time to get these trades executed. So give yourself some time. So I usually say start around 3:15, putting them in. And then when you put them in, add juice to them, right? Add some premium to them right off the bat. And then start lowering it down. And see, because you know what? You might find that you throw it in and you add some juice to it and all of a sudden it gets filled. Because some other jackass has a market order in. And you know what? The guy down on the programs running the floor, they don't care. They're like, all right, some asshole's got a market order. Here you go. Have a nice day. Here, it's yours. So anyway, that's it. Have a good one. And I will be back hopefully tomorrow.